monitoring assessment methodology. My name is Roberto Ottolini and I'm a Senior Policy Advisor at the IIS Secretariat. We are joined today by Dieter Hendricks, the Chair of the IIS Macroprudential Committee, and by Daniel Beyan, the Chair of the Macroprudential Monitoring Working Group. The purpose of today's webinar is to guide you through the process for this public consultation. We will provide an overview of the consultation document and explain you how you can submit your feedback. We will start with a presentation followed by a Q&A session. Please note that this webinar is being recorded and there will be also the slides are already uploaded on the IIS website. With that, I hand over to Dieter to begin the presentation. Over to you, Dieter.
Thank you, Roberto, and also from my side, welcome everyone to this webinar. I'm going to present some background slides on where to situate this work of the IIS in the broader IIS mission, and then to have a zoom into, of course, our global monitoring exercise and the role that the IAM methodology fulfills within this exercise before we go into the details of the public consultation. So let's move to the first slide, where the only thing I would like to emphasize here is that within the mission of IIS, next to promoting an effective and global consistent supervision of the insurance industry, there is, of course, also what you see here under the second bullet point. An important part of the work at IIS is contributing to the global financial stability, with a particular focus, of course, on the insurance sector. So we can move to the next slide. This is all translated. Some of you may already know the details of this in our new strategic plan going forward for the period 2025-2029. The details are here depicted on the right. I can tell you that the monitoring and the response of the global supervisory community to the key risks and trends is still highlighted as one of the 4 core objectives of the IIS. So we know there may be a shift a little bit away from the global standard setting towards this monitoring, towards supporting effective supervisory practices, and towards implementation assessment, of the standards that over the recent years have been updated and completed, amongst others, with as many of you know, the ICS. So within this first core objective of monitoring and responding to key risks and trends, our global monitoring exercise fulfills, of course, a very critical role, and I think we can go to the next slide for that. Here we are. Our global monitoring exercise, as I assume most of you know, is one of our key pillars of our holistic framework, and the holistic framework was set up to deal with systemic risk in the insurance sector, or the potential buildup of systemic risk. And within the global monitoring exercise, we have 2 key data streams that we need in order to be able to monitor the key risks and trends. One of these data streams is linked to the individual insurer monitoring, in which 60 of the largest insurance groups around the world from 18 jurisdictions participate to this IAM. And next to the IAM, we have a sector-wide monitoring in which 26 IIS members meeting the criteria, plus extra volunteering members, to get to a total of 53 jurisdictions participating to this sector-wide monitoring exercise, which all in all makes that we are able to cover an exercise which is very representative by covering more than 90% of the global gross written premium. Both pillars, the individual insurer monitoring and the sector-wide monitoring, are of course key, because they form the basis of the data that we use at IIS to derive our conclusions in terms of key risks and trends of the insurance sector, but also to make sure that we have an adequate supervisory response. So I want to thank again everyone contributing to this exercise. Because if today we are able to do a relevant analysis and make sure that we have a globally coordinated and adequate supervisory response, it is mainly thanks to the data that we receive in scope of these two exercises. Let's move to the next slide. Our global monitoring exercise, as most of you know, follows an annual cycle in which we usually collect the data starting in March. Then there is a data submission in the period May-June, followed by data validations, discussions, feedback loops, and that all accumulates into our collective discussion on key identified risk and trends within the global insurance sector in September each year. It's also during that discussion that we, as a supervisory community on global level, try to determine whether there is a need for coordinated supervisory response. All of this comes together then also in a series of reportings to the public in general via our GMAR, our Global Insurance Market Report, reporting to everyone who has participated, that is the insurers, but also the supervisors. And of course, also very important part of this work is the reporting that we do towards the Financial Stability Board, as they use, of course, our sectoral input in their broader cross-sectoral assessment of systemic risk. So in that sense, the IAS input is also used by the FSB in this respect. Okay, let's go to the next slide. Now, within the global monitoring exercise, as I said, one of the key components is the individual insurer monitoring. Within that individual insurer monitoring, we use a methodology, and that methodology is used to calculate a systemic risk score for all individual insurers participating. For that methodology, we have identified 5 systemic risk categories and 13 indicators, all receiving a certain score based on the data that we get and also based on the methodology that we have developed. All that is weighted to come up with a total score per insurer. We have a 3-year cycle here, which means that in the current 3-year cycle, we're nearing the last year, 2025, and we need to look forward to our next 3-year cycle for the period 2026-2028. So for us at IAS, and some of you may know that already, that is the moment in time that we want to take a look at our methodology and see whether or not there is an opportunity to change things, to tweak things, to modernize things. Within that 3-year cycle, it's also key to know that it's the FSB themselves who will review its experience with the entire process that we've set up at the IAS for assessing and mitigating systemic risk based on the holistic framework. So the review of our methodology follows in that sense the same rhythm as the review of the FSB of the entire holistic framework. I think we can go to the next slide. Next to these data that we gather to calculate the risk score, we also have data that we gather to develop and set up what we call auxiliary indicators. Auxiliary indicators are those indicators that we use for monitoring purposes, but without a direct impact on the systemic risk score. Most of you will know that we have already metrics concerning liquidity risk. So we have a set of auxiliary indicators, which was finalized in November 22, and for which you can find also all the details on the website of the IAS. We are currently developing and are in the last line of developing auxiliary indicators also for credit risk, derivatives, reinsurance, mark-to-model assets, etc., as well as some potential revisions to our liquidity metrics. This was a public consultation that we recently closed in February 2025, for which we are now into the final phase of finalizing these indicators. Let's go to the next slide. As I said, we report all of that in our GMAR report to the public. Within the GMAR report, we also spend some time on some of the other emerging risks. Climate risk is one of those examples that is covered in our regular GMAR reports. But I would also like to highlight that from time to time, IAS does develop also some special topic reports in which we focus on a certain specific risk. For instance, we've had one on cyber risk in 2023, and we're currently developing a GMAR special topic on the potential financial stability implications of natural catastrophe protection gaps. So that is work which is still ongoing. I'm going to stop here. I'm going to give the floor now to Daniel, who will guide us through what we intend to change, or what we want to consult upon at least, in terms of our IAM assessment methodology, taking into account that whatever we will change will then be used going forward for the next 3-year cycle. I'll stop here, Daniel, please. I give you the floor.
Thank you very much, Dieter, and thank you, Roberto. Could go to the next slide for the overview. Yes, the public consultation document has, for all changes that we plan to do, some information on the background, why we intend to change this, what we want to change, and questions where we seek input and views from stakeholders. Next slide, please. The objective is, as Dieter said, to update the methodology for the next 3-year cycle of application, so 2026 to 28. The indicators should be changed to update or to improve the accuracy of those indicators, and also to align them better with the developments that we saw in the recent years in the insurance sector. The main changes to indicators themselves that we plan or propose is to level 3 assets indicator, intra-financial assets indicator, and intra-financial liabilities indicator. First of all, the level 3 assets indicator. What we saw in the recent years was impact of accounting changes that were done, for example, the introduction of IFRS 9 and 17 on the indicator scores. And we also saw an inconsistent treatment across jurisdictions or between insurers that led to different outcomes on the scores. We try to reduce this impact of accounting changes by changing the level 3 assets indicator and including all physical real estate holdings, which were excluded until now, and also including assets that are held at cost, but that would qualify as level 3 assets if held under fair value. We also heard as an input from stakeholders in the past that the asset liquidation scores might not adequately reflect the insurer's asset liability management practices, like natural hedging of illiquid assets and liabilities. In order to address this concern, we propose to use the insurance liquidity ratio, which is so far only used as an ancillary indicator, to adjust the scores for asset liquidation indicators. This should be done by applying a multiplier if there are low insurance liquidity ratios, or a haircut if there are high liquidity ratios. With the intra-financial assets and liabilities indicators, we intend to also change and simplify those a little bit, because currently we take account of derivatives exposures in several indicators. On the one hand, the OTC derivatives are included in intra-financial assets and liabilities with both net value and potential future exposure. Exchange traded derivatives are taken into account in the short-term funding indicator with their potential future exposure. And the gross notional amounts of OTC derivatives are the derivatives indicator itself. We saw some opportunity to reduce the reporting complexity and reduce data burden by combining several data items. We propose therefore to remove the potential future exposure of OTC derivatives from the interfinancial assets and liabilities indicator and include it in the short-term funding indicator instead. In addition, we propose to combine the exclusions from borrowing, which are currently done in order to calculate the interfinancial liabilities indicator, into one single row to simplify the reporting there. And this would then also lead to a change or a minor change on the insurance liquidity ratio, where we propose to include the combined other borrowing as well. All this clearly changes the indicators themselves, but we also propose to take into account some other developments by changing the indicators weighting. The weighting is used to calculate the final score out of all those indicators used. On the one hand, we propose to reduce the weight of the level 3 assets indicator, also based on the update that we're proposing for the level 3 assets. We propose to increase the weight of the short-term funding indicator instead in the asset liquidation category. And on the global activity category, we propose to shift part of the weight of number of countries to revenues outside of home country to better reflect the size of subsidiaries outside of the home country. Denominators in the current methodology are still based on 2018 data, and we propose to update those denominators. On the one hand, they need to be updated for level 3 assets indicator, interfinancial assets, interfinancial liabilities, and all indicators that will be changed. But we propose to update all of them based on more current data. Next slide. In addition, as an overarching topic, we propose to update the insurer pool selection criteria. So the criteria by which we select whether an insurer is asked to provide data to the individual insurer monitoring in the first place. Those criteria are, as we see here, if the total assets are higher than 65 billion and the premiums from outside the home countries account to more than 5%, or if assets are more than 215 billion US dollars and there are any premiums from outside the home country. We also currently already encourage the inclusion of insurers with assets approaching 65 billion. We propose to change this to take account for inflation to 70 billion US dollars and 235 in US dollars, and to further specify or clarify what we mean by the encouragement of inclusion of insurers that are approaching 65 billion. And we propose to have a threshold or a number saying that above 55 billion, they should be included to improve the regional balance and diversity. We also have some general questions on the GME methodology and the reporting of the IAS to the public and to the participating insurers in the public consultation document. We hope for your feedback on the consultation by Monday, 18th of August, and we will then take this into account when publishing the GME documentation for the next cycle, 2026 to 2028. With this, I would hand over to Roberto Tolini to guide you through the consultation process. Thanks.
Thank you very much, Daniel. So I will start with questions for stakeholders. So in the consultation paper, You will see at the end of each section some light blue boxes that include the questions for stakeholders for the public consultation. There are in total 22 questions seeking inputs on the proposed revisions and methodology enhancements, simplification of the data collection, and broader feedback on the global monitoring exercise. The questions are also summarized in a separate document that you can see linked in this slide. You are asked to provide responses using the consultation tool available at the link in this slide. So if you click on this link, you will see a tool popping up with the introduction that you see in this slide, and then you can answer, first fill in your details and then answer there all the consultation questions. Importantly, you can work on partial submissions, save a draft, and then finalize your responses only in a second stage. We would also like to highlight that you don't have to respond to all 22 consultation questions, but you can also provide responses only to some of the consultation questions. In terms of next steps, the key date is 18th of August. So the deadline to provide your feedback to the public consultation using the tool that I just described. And then we aim to publish the resolution of comments and updated documentation on the methodology by the end of this year, together with the updated documents on the ancillary indicators. With that, I will hand over to Dieter for the Q&A.
Thank you, Roberto, and thank you as well, Daniel, for guiding us through that. So I can already highlight that for those of you who would not have noticed yet, that the slides here, of course, are available already on the website of IIS, so you should have access to them. Other than that, we're happy to try to answer any questions you may have already today regarding this public consultation. So if you would like to take the floor, please do not hesitate to either raise your virtual hand or to let us know via the chat function if you have any immediate questions. I'm going to pause here and let's see if we have any questions. So I do see, Roberto, in the chat that not everyone seems to have access to the slides on the website, as some people seem to get a error. Maybe we can try to take a look at that.
Yes, certainly we will check that. Thanks.
We will check it because everyone should have access to the slides. So if that problem persists, do not hesitate to let us know, but we'll have a look at it. Any other immediate questions? Yes, I see a virtual hand up of Tim Finney. Can we try to give him the floor?
You should be unmuted, Tim.
We should be. Yes, now we can hear you, please.
Great. Thank you, Dieter, Daniel, Roberto, for the very helpful presentation. I have, I guess, a two-part question on section 2.2. I was wondering if you could maybe explain a little bit more background on the rationale for using the ILR for beyond just an ancillary indicator, and then also was wondering if you could explain whether you've considered other liquidity metrics instead of the ILR, such as the company projection approach or other measures of liquidity that might be out there. Thank you.
Thank you, Tim. I'm going to pass the floor to Daniel or Roberto to give a immediate reaction to that.
Yes, thank you for that question. We intend to use the ILR there because we saw quite good reporting quality over the past years with respect to the insurance liquidity ratio, and also believe that it takes into account the asset liability management very well. So in order to have a process which would apply for all insurers in the insurer pool, we propose to use the ILR and not the company projection approach for this calculation. The change is that currently it's an ancillary indicator, one of several, as you said, together with the company projection approach. But in order to have an aligned approach for the scoring, we propose to use the ILR. But happy to receive your feedback also via the public consultation on this topic.
Thank you, Daniel. Yes, indeed. Any other questions at this stage? Seems not immediately. I'm gonna give 30 more seconds if anyone would like to. Yeah, I have a virtual hand up now from Brad. I don't have another name, just Brad. So please, can we try to unmute him?
Okay, thank you. That unmutes me. The
Yes.
question is, as you're looking at to make adjustments to account for inflation on size of the enterprises that have cross-border operations, is that going to also change the definition of IAIGs? Are you going to change it from 10% to 5% as part of the same effort?
You're referring to the criteria that are currently used by IAS for IAIGs. Is that my understanding correct?
Yes.
Yeah. So far, no, there is no link. Yeah? So we have criteria for IIGs, that is one thing. And then we have here the criteria for those insurers that participate to the IIM pool, which is a different type of exercise, I would say. But Daniel or Roberto, please correct me if I would be wrong.
No, I totally agree. There is no direct link between the inclusion criteria in the insurer pool, where we try to monitor potential systemic risks, and the question of whether an insurer is an internationally active insurance group.
Thank you.
No problem. Thank you as well for the question. Any other questions? No. Seems not. I definitely don't want to hold you up any longer than necessary, so I'll check a final time whether or not there are other questions. I don't see anything in the chat, and I don't see any virtual hands raised. Okay, so at least I hope that our presentation was useful. We'll make sure to check effectively that the slides are available for everyone on the website. So if that problem would persist, please let us know. And of course, if you would have any questions whilst going through the document and trying to answer the public consultation questions, do not hesitate to contact us. We'll be happy to help you out. So, thanks all for participating today, and hope to get your feedback during the consultation process, and we'll be happily coming back to you near the end of the year with a final version of the review of our IIM methodology. Thank you for joining us today, and hope to see or hear you in the near future. Thank you very much.
Thank you.
Very much.